Question 4. So we are going to start by looking at the preparation of the income statement. So our question reads, Hammer Nails Limited manufactures steel cabins. They provided the following information from their accounting records for the year ended 2019. Of course, we have a list of balances that we have, a list of information that we have. So from the information that we have on the preparation of the income statement, we are going to start with the figure for sales. But you see that we are not given the total figure for sales. We are only given the selling price per unit, and then we also have the number of units that were sold, which is 1,200. So with that, which means that get the value of sales, we multiply 1,200 by 120 rands. Then we get the total value. So on our income statements, we're going to say sales. So in brackets, we multiply what number of units sold, 1,200 times the selling price per unit is 120 rands. So we multiply by 120. So if you multiply, you're going to get your answer as 144. So you have 144,000. So from sales, you are supposed to list your variable costs. List your variable costs. So if you go back to the question, you'd see that the question requires us to prepare our income statement according to the direct method, whereby on the direct method, we are first going to find the marginal income. We first find the marginal income, whereby marginal income is equals to your sales minus your variable cost. So we have put our sales. Now we are on the variable costs. We are listing all the variable costs that we've get a total. Then we subtract the total of variable costs from sales to get our marginal income. Then after getting our marginal income, that's when we are now going to subtract our fixed costs. So with that now, you'd see that we have now variable costs. So we're going to list the variable costs that we have in the question. So you see that we have got direct material as one of the variable costs. They're only given the per unit value, which is 10 rand. But of course, we know that we have got 1,200 units. So to get the total direct material cost, you say 10 rand times 1,200. So we come here, say direct material. So on direct material, in brackets, we show the working by saying 1,200. And then we multiply by 120. So we try to see in direct material the value per unit of direct material. We are given it as 10 rand. So we are going to use our 10 rand. So we multiply by 10. So we do as such, we are going to get our answer is 12,000. So we have 12,000. So from direct material, the next variable is direct labor, which is now 5 rand per unit. So you're going to say 5 times the number of units, 1,200. So direct labor. So 1,200 times 5, and then we get to 6,000. So this is what we have on that part. We check for other variable cost that we have. We've got variable manufacturing overheads, which is 800. So we put also that one. Variable manufacturing overheads. Which we have is 800. Then after variable manufacturing overheads, we have got the advertising and administration. They put a proportionate in terms of variable. Of course, we've got 45% of variable inside 10,000. So to get the variable of advertising, you say 10,000 times 45%. So we do that, we are able to see that you are going to get your answer is 4,500. Then for administrative costs, we got 50% fixed, which means variable is also 50%. Say 100 minus 50, you get your 50. So it means 50,000 to get our variable, we multiply by 50% again. So we do that, you get your answer is 7,500. So this is going to be a variable. Selling, remember advertising is selling, it's a selling expense. It's selling, and then we've got also administrative. So it's variable. Selling and administrative cost, we just combine them. So we add 4,500 plus 7,500. So on this part, we are saying a variable selling and administrative costs are whereby you are in brackets, we say your 4,500 plus your 7,500. So here the two, you get your answer is 12,000. So from variable selling and administrative, we can check if we've got another one to see that this is the last variable that we have. So we can now add our variable, can just close and add our variable. So if we add our variable, we say 12,000 plus 6,000 plus 800 plus 12,000. You get your total is 30,800. Which we are saying less. So this 30,800 is the variable cost, which we are subtracting by saying less. So we put our brackets to subtract. So we're now saying 144,000 minus 30,800. You get your answer is 113,200. So this is now sales minus variable cost, which gives you the marginal income. So we have now marginal marginal income. So this is what we have on that part. Then from there, we are now going to put our fixed cost. So we are just saying less fixed cost. So for the fixed cost, we check what fixed cost we have. We can just put our fixed cost beneath, then we have to get the total. So if you refer back, we've got fixed manufacturing overheads, which is 1,500 on this part. So you can start by putting that one, fixed manufacturing overheads. Fixed manufacturing overheads, which is going to be 1,500. And then we also have fixed selling and administrative costs. We've got fixed selling and administrative cost. So we can just maybe write selling and administrative. Selling and administrative costs. So we now have to calculate the fixed proportion of those two, whereby we now say for advertising, which is the selling, we said 45% is variable, which means the fixed is 100 minus, so 100 minus 45. 100 minus 45, and then we get your 55%. So it means the fixed is 55%. So here 10,000 times 55%. And then if you do that, you get your 5,500. Then the fixed inside administrative, we have got fixed 50% fixed. So it's straightforward. So you multiply by 50%. And you get again 7,500. So the total, we are adding the two. 5,500 plus 7,500. So we go in brackets. We say 5,500 plus 7,500. 18,000 if you add the two. So basically, this is what we have. So with that now, we have to add to get the total for fixed cost. Of course, we only have two figures that we have. So 1,500 plus 13,000. 1,500 plus 13,000. You're going to get your answer is 14,500. Which again, we are saying less. So we subtract. So you're now saying the marginal income minus fixed cost. So if you now say marginal income minus a fixed cost, you're going to get the net income. So on this part, we are going to have our net income, which we are going to get by saying marginal income minus fixed cost. So 113,200 minus 14,500, and then we get our net income of 98,700. So this becomes the last part that we have. So this is what we have for the preparation of the income statement according to the direct method. So we take note that this layout that we have applies only when we are using the direct method. So we take note of that. So we refer back to our question. We now go to 4.2. Calculate and round off to the whole number, the break-even quantity. So calculation of break-even quantity, we need to bring the formula first. So this is our 4.2.1. So break-even quantity is equals to total fixed cost over sale price per unit minus variable costs per unit. So this gives you the quantity, the quantity in break-even point. So we see now that on this part, on this part, what we have is the sale price per unit minus variable cost per unit will give you marginal income per unit. It will give you marginal income per unit. Remember, when we wanted to find the total marginal income, we said sales minus a variable cost. So when you are now saying sales price per unit minus variable cost per unit, you get your marginal income per unit. So that's what we have. So using that one, we can just take our fixed costs according to the question. So it's equal to fixed costs. We'll see that our fixed costs we are having. I'll check in terms of what we have in terms of fixed costs. Remember, we did prepare that, and we got total fixed costs here is 14,500. This is total fixed cost. So that's the figure that we are using, 14,500. So we divide by, according to our question, we did calculate marginal income. So you can just quickly find marginal income per unit. You can just substitute the sale price per unit minus variable cost per unit by marginal income per unit. So we go back to our marginal income. We found it as 113,200. So to find the unit, we are going to subtract by the total number of units that we have, which is 1,200. So basically, we are saying marginal income 113,200 minus a number of units, 1,200. You got to get the marginal income per unit. So you divide that, I leave it maybe two decimal places, it becomes 94.33. So this becomes your marginal income per unit. We are going to substitute here 94. So we do that. You see that the numbers that we are going to get is 154. 154 units. Remember, the question is saying to the nearest whole number. So it means after getting it, you round it off to the nearest whole number. It becomes 154 units. So this becomes your final answer for break-even quantity. Then the second one is saying the break-even value. So break-even value now becomes simple when we what is the break-even quantity. So this is now our 4.2.2, whereby break-even value is equals to break-even quantity times sale price per unit. Simple as that. So that's the break-even quantity we now know is 154. And then we multiply by sale price per unit, which we have as sale price per unit is here is 120. So we multiply by 120 because it's 120 rands. So we can try to multiply and see what you get there. So if you multiply, you see that you're going to get 18,480. So simple as that. Okay. So with that, we move on to the next part, whereby we have got the margin of safety ratio. Remember, when it's margin of safety is basically the level number of units. We can just maybe say number of units, minus the break-even point or the break-even quantity. Then you get the margin of safety. So when it's now a ratio, which means you have to express it as a percentage. So in terms of that now, let's just see how we are going to calculate that. So this is now basically the margin of safety ratio. So it will be equal to your sales minus your break even. We can use values or we can use quantities. So in this case, we can use values because we have the values. And then the answer that you're going to get, you divide the answer that you are going to get, you divide by the cells. And then you multiply by 100/1. Then you express it as a percentage. So in that case, we see that our cells, we calculated our cells, we got them as 144,000. So it means 144,000 minus the break-even value, which we also calculated. And the figure that we got for a break-even value is 18,408. And then after getting your answer, you divide by sales again, which is 144,000. Then multiply by 100/1. So let's just try to calculate that one. So by calculating, you're going to see that you're going to get your answer to the nearest whole number. It becomes 87%. So this is what we have for this part. Then the last question is draw the break-even graph. So we need to draw the break-even graph. So break-even graph. So obviously we are going to use the values that we have in the question, but in terms of our axis, we are going to have the vertical axis. We have the vertical axis. And then we also have our horizontal axis. And of course, this is going to be the point of origin, which was 0. And then on the vertical axis, we are going to put our runs, indicating our value. And then the horizontal axis becomes the number of units. So we can just refer to number of units. And of course, the 45-degree line, in terms of the 45-degree line, is going to be the total sales value. So this is the total sales. Total sales are curve. And then from there, we also have the fixed cost. Remember, the fixed costs do not change with the number of units. So we have the same fixed cost. So it has to be a horizontal line. So our fixed costs, we can just refer back to the question. We see that according to the question, so according to the answer that we calculated, we see that our fixed costs, we got 14,400, 14,500 is the total of fixed cost. So when plotting, we are supposed to indicate that this is 14,500. And then we draw a horizontal line indicating our fixed cost. So this is the fixed cost curve, horizontal line. Then our total costs, they start at fixed costs at 40,500, which means if we have got 0 number of units, we still have fixed cost of 14,500. That's what it means. So it means on that part now we are saying our total cost starts from where we have where fixed cost starting, and then we go. So this is typical total cost now. So this is now the total cost curve. So that's the scenario that we have. And then of course we know that the intersection point of total sales curve and the total cost curve gives us the break-even point. So we're saying break-even point is here. So we can just label break-even point. And then we know that we do know the break-even points in number of units. So we can just take it to the horizontal axis. And when you calculate the break-even point, when you calculated the break-even point, what we got is 154 units. So it means on this point, we have got 154 units. So we can just indicate that this is 154. And then, of course, we do have the break-even value. It will be now on the vertical axis. So the break-even value, we calculated and we got 18,408. So it becomes 18,480. So this is what we have for that part. And then we've got this issue of the total sales gap. I mean, the total sales is what we got here is 144,000. So it now comes at the upper limit, whereby we're saying that's where we had our total sales. So we can just put it somewhere here so that it intersects at this point. So this total sales of we have 144,000. So indicate 144,000. Then of course, what units made us achieve 144,000? We go down to the horizontal axis, whereby maybe we can put at this point, or we can just extend on this point in terms of hour. So on that part, we are now saying what made us achieve 144,000 is the number of units that we had in the question, which is 1,200 units. That made us achieve 144,000. So on that part now, we are now saying 1,200. So basically, that's what we have. So here is 1,200. So it means we just have to maybe relabel in terms of our horizontal axis is number of units. So basically, this is what we have in terms of the break-even graph. So it's an indication of our break-even point and the curves that we have inside. So I'll thank you for listening in terms of our presentation of the break-even graph, which is the last question that we have on question 4.